You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, that music means it is time once again for a little program I like to call around these parts Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this network upon which you guys have been binging all week. Glad to see you made it through to Friday here in one piece. Remember, if you like what you hear, make sure, A, you subscribe to our full network. If you just get involved views, you're missing out on whole bunch of other great stuff that's hitting you all throughout the week. And then B, if you like what you hear, keep those reviews coming in your platform of choice so new folks can continue to discover this network in these troubled times. And, of course, keep those questions coming. We do love to hear from you guys. And let's see who we're hearing from on the program today. First off, joining me from the land of the pit, a.k.a. a Costco near you, he is the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com by way of Carmen Line Capital. Mr. Meatball, welcome back to the program. A, and then B, have you scoped out the Costco scene in Austin? Is it up to your standards, sir?
There is a Costco a stone's throw away. It's not as close as the one by me now. I'm about 0.8 of a mile from one here, but there's one just a stone's throw away from my new digs. That was one of my requirements.
If I'm not getting you on vol views from the beans aisle in Costco down in Texas, then the whole gig's up. What's the point of living then?
Correct. I agree. I'm hoping I don't have my battery die like I did the one time at Costco. But like the beans, I like the giant bags of flour, the 12 packs of Kraft macaroni and cheese, always a win.
I don't think anything comes less than 12 at Costco. It's impossible to go buy one of something. Like, I challenge you, unless it's something that's 1,000 pounds. You're not going to find anything of one in the Costco store. But I digress. We can talk Costco for hours. Not the Costco hour is indeed Volatility Views. And joining us to help parse the volatility action in yet another weird week, joining us in the MIAX hot seat, a repeat offender, Mr. Jim Carroll, the Senior Vice President and Portfolio Manager over there at TOROSO Advisors, a.k.a. VIXologist on Twitter. Mr. VIXologist, welcome back to the program, sir.
Great to be back, Mark. And I will actually be barbecuing some ribeye from Costco tonight. So,
oh, nice.
Costco's the theme today.
So you bought 400 pounds of ribeye is what you're telling us?
Yeah, it's like that drive-in that Fred and Barney used to go to in the Flintstones, right? Where they put that huge thing on the side of the car and it tips everything over.
The giant rack of.
And I'm actually cooking meatballs tonight, believe it or not.
Oh, everyone's appropriate here. I'll have to see what I'm cooking today. I don't think I have anything appropriate or from Costco. I guess we'll find out as we keep on rolling right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. Welcome back to the Volatility Review, the portion of the show we break down what the heck was going on. Yet another weird, another wild, another head-scratching kind of week in the market, certainly from a vol perspective. Just this show alone is a good example. Not too long before showtime, we had most of the major vol measures we watched on this show up pretty firmly. We had VIX, or Spikes, was up over 3 handles, about 3 1/3 handles. VIX was up strong. Spikes now at about a 24.5, so giving back about 2 points of that. Still up about a point and change from last week, but nowhere near as high as it was not too long before showtime. VIX cash also similarly up a little about 2 1/4 or so from last show, but still pretty firmly off from where it was not too long ago. About 24 and actually a half right now, so it continues to drop. It was 24 3/4 just a few minutes ago, now about 24.5. So the worm continues to turn to the dark side from a vol perspective out there. And our old friend VVIX was at a 120. That puts it up about 6 handles coming into showtime. And, of course, you wait a few minutes in these markets and things change. Now it's down about a 117, which puts it up about 3 handles. Still frothy, still active, still around that 120 level, which is that barometer we like to use here on the show for when things are really getting active and you have to start paying attention out there. Speaking of paying attention, a lot going on out there in the marketplace this week that you probably want to pay attention to. First, of course, we have this ongoing thread that kind of dominated the week. Talked about it on our option block program and again on TWIFO, but I want to get everyone's thoughts on it here as well as, of course, what's been going on with the Fed this week, effectively coming out and seemingly stepping away from what their long-standing policy mission really has been. Go back to Volcker or Greenspan, pick your Fed administration, and chances are they're pretty firmly in the inflation hawk driver's seat now here this week saying, jobs, unemployment, we're going to really focus more on those. Inflation really hasn't been that big of a threat for the last decade or so, so we're going to fix our focus to other things and maybe let the economy run a little bit to the upside and not really be too worried about stamping on the brakes when the inflation fears might otherwise have triggered us to do just that. Everyone remembers the now infamous irrational, exuberant sayings of Alan Greenspan, effectively trying to come out and put a brake on everything for that exact reason. Hyperinflation was his worst fear. That's pretty much any Fed chairman's worst fear. And yet Powell coming out there saying, not so much. These old things like the Phillips curve we used to pay attention to. Let's just throw that out the window and let's go to other metrics that we're watching out there these days. So a lot to parse on that front. Also, an interesting piece came across our radar here as well. I kind of wanted to discuss with you guys. Came over Market Watch, our buddy over there, Mark DeCamber. Usually does pretty good stuff. This one I'm not so sure about it. They like to write, very, I wouldn't say clickbaity, but attention-getting headlines over there sometimes at Market Watch. And this one certainly worked. I clicked on it. It was option bets that the stock market will continue to soar have exploded to .com bubble levels. And they go on about here a bunch of different things. As every article about options does these days, they have to explain what a call option is. So they spend a lot of time doing that. Then they get into options bets that the SPX will extend its run-up in months to come, have roughly doubled, far exceeding trading in securities. Then they go on with a whole article about, retail enthusiasm for the market from this analyst they quote at BIG, B-I-G. I'm not familiar with them. And they talk about the commission-free trading has driven this surge of options bets in the SPX. And maybe it's a mistake. They put SPX, maybe they meant SPY in there, but I don't know any retail traders who are using Robinhood who are trading SPX. That's a hugely beefy contract, obviously. And they say the prevalence of call buying, in our view, is a clear-cut signal that sentiment is extended after a blistering equity market rally. since March. This is a good example, listeners, of why you probably have to do a little bit of your own due diligence out there, because I don't think this is even correct. I'm looking here at the numbers for SPX in particular, because that's what they quote in this article, and the call open interest right now is only at about a 40 percentile. So it's not even at a 50 percentile, not let alone 95% or something that would necessitate an article about the blistering pace of calls versus the dot-com bubble. So I don't think this is correct. So another thing to pay attention to as you're looking at all these very, let's say, clickbaity headlines out there. I'll say it. Let's just put it out there. Again, I like Mark. I've talked to him before for a number of articles. I think maybe someone just led him astray a little bit with some of the data out here. Also, they talk about the VIX and how it's still elevated in this piece and how that dates back to the run between 1996 and 2000 when the VIX was kind of firm, even though the markets were rallying. So there is some interesting nuggets to be gleaned from all this, but a lot to parse, a lot to unpack here on this week. Jim, you're our guest. We'll start with you. It's been a crazy, kind of turbulent week. I'd like to get your thoughts. I mean, this is not the macro show, so we don't have to go crazy into it, but I'd like to get your thoughts on what the Fed did this week, or at least announced, and then B, what is lighting up your tape from a vol perspective this week?
The thing that caught my eye when Powell's speech was digested was that the 10-year Treasury yield went up, right? They basically are saying they're going to keep rates low forever. They're going to let inflation run a little hot, if that's what happens. And the market says, oh, we're going to tick rates up, and rates are still up from where they were the day before yesterday. So I thought that was a little bit of a head scratcher. And then, we saw equity markets, mixed, and we saw a bid to volatility, which, the speech was not a complete failure, but I'm not sure it accomplished everything he wanted it to.
Yeah, it was a weird one. I think a lot of people had a lot of differing opinions on this speech, which I thought was kind of interesting. I thought the message was kind of clear-cut what they were saying, but other folks have been kind of differing, which is kind of interesting. Aside from all things Powell, sir, what else caught your eye from a vol perspective this week, sir?
Well, we've had volatility going up with the markets, right, which we're taught in school that equity up, VIX down, VIX up, equity down, this inverse correlation. And we've lost sight of that this week. What I've been tracking is the fact that VIX has been trading in a narrower and narrower and narrower range, what I like to refer to as the squeeze. And we're working on, 15 days of what, by my definition, is a squeeze. I don't want to get too technical, but, these things tend to happen from time to time, and they have to break out one direction or another. And we still haven't figured out what direction it's going to be, because yesterday we got a big pop in VIX and it faded. Today it tried to pop again and it faded. So, we're trying to figure out, as the market continues to notch new highs, what the hell's going on with VIX? Is this, a volcano getting ready to erupt, or is this just what I refer to as a whack-a-mole moment, where VIX gets a bid and then the mallet comes down, and if you're long VIX, you just get beat back into the ground. So keeping an eye on that. The other thing that has been lighting up my screen is the relationship of implied to realized, which is about as wide as it's ever gotten. I look at both the VIX and the futures relative to, call it a 1 month realized. People can measure it different ways, but any way you measure it, VIX to that measure of realized is about 17 points. It's been wider only 10 times since 2004. VIX futures, I look at, the VIX, what I call the VIX 30, which is the interpolated front 2 months that's used to price the exchange traded products. That's 21 points north of realized, and it's only been wider 2 times since 2004. So there's something going on out there. VIX remains bid even as realized has just gone through the floor. And there are a whole bunch of theories on that. So I'll stop there and we can talk more about it.
I like it. A lot to parse, a lot to analyze there. I've often joked on this show. I say a couple of things regularly on this show. Once, the answer to all vol questions can be found somewhere in the VIX futures term structure. You have to kind of just dig for it a little bit. And then B, at the end of the day, vol math, for all the complicated calculations we throw out there, the volatility math is actually relatively simple, and it really just boils down to what you were just talking there, Jim, which is how much is it moving, all right, and give that some multiple to it. And that's kind of inescapable at the end of the day. If the index isn't moving, you can't sustain elevated volatility levels unless we're in 2020 and we're in this kind of rarefied, unprecedented era. We have an election looming on the horizon. We still are in the middle of a pandemic. We have the Fed saying, I guess, debatable things out here this week. A lot of other shoes dropping, civil unrest, all these other things that are being thrown into that volatility stew out there. But you're right. At the end of the day, the realized vol should kind of trump all of that. If it's not moving, forget the rest. And yet we're not seeing that, which is very strange. And you're right. It's not too often that we see this level of a gulf, of a chasm between implied and realized, and that's something that has to change. Obviously implied has to come in, or realized got to get the heck out of the barn there and to start moving again. And so far we haven't seen that, which is very strange. Mr. Meatball, a lot to unpack there. A, if you have any thoughts on what the Fed said or did not say this week, have at it. B, what's lighting up your tape from a vol perspective this week? And C, what do you have to say about this incredible chasm between realized and implied vol, sir?
Jim hit the nail on the head. I cannot remember the last time we saw these cash to future spreads the way they are. October is like 32 and the cash is 24. That's 8 points. September, which has 3 weeks to go, was 4 points at the beginning of the week. I mean, the smart money is terrified, is what I would say. And I always consider these VIX futures guys, the guys that are really determine the price levels of these things, they are terrified and they are not letting any of this go. I've never seen an election premium like this. There's a lot out there, and I think there is a ton of risk. We're at an all-time high in the S&P, and the VIX is 25. Think about that. That is the VIX is supposed to be 11 when we hit an all-time high. And so I think you have a lot of perceived risk, mostly from the NDX, affecting the S&P 500. And that is what is driving things. I mean, Apple is at an all-time high and has an implied volatility of 60. Google, Amazon, Facebook, Microsoft, their implied vols are through the roof. And it's because two things, right? We talk about that upside call buying. One thing that a lot of these guys don't realize is big money doesn't buy upside calls because they think the market is going up. All right. Big money buys upside calls so they can dump their stock and not feel like a jerk when the stock market keeps going up. So this out of the money call buying, the non-retail version stuff, out of the money call buying that is probably involved in SPX is probably hedging for people that are lightening up their portfolios. And that's something to think about. The amount of put buying that is taking place is interesting. And, there's been some VIX trades, notably in like September and October. They're starting to come for, you're going to see VIX activity start to pick up in the coming days. I'm very, very interested in what happens on Monday when Apple reverse splits, because there's some ramifications with that, not reverse splits. I don't know why I keep calling it a reverse split. It's just a split. Maybe because we talk USO so much, I guess. But there is some real interesting ramifications of the Dow rebalance as it pertains to the diamonds and some of the other ETFs that track the Dow, the money managers that track the Dow, and how this split is going to affect those. So, for instance, the diamonds, in order to achieve a Dow tracking, they literally just hold the same amount of shares of all 30 stocks. Well, when Apple splits 4-for-1, they're going to have, instead of 6 million shares of Apple, they're going to have 24 million. Apple, they're going to have to sell and then spread those dollars across all of the other stocks. About 15 million, 16 million shares of Apple to get that balance. Now, that will go through some sort of black box, dark pool. But if you think that's not going to affect how Apple behaves on Monday, you think again. So that's interesting to me. The DDM, which is the levered Dow, surprisingly active. They're going to have to do some stuff. So I'm really fascinated by what next week is going to look like. And I think that's part of the reason for the way vol is pricing right now is a lot of people don't know what's going to happen when Apple and Tesla split, and notably Apple.
I think the big takeaway from all this these days, you have to take all the old relationships, all the old analysis, and kind of just throw it out the window, like the Fed did this week with the old long-standing Phillips curve. Even though that's a much maligned thing, I've joked about that for years. That thing was broken with the .com bubble, but the Fed tossed whatever remained of that out the window this week. The relationship between implied and realized out there in the vol space, kind of toss that out the window right now. The notion that when you're at an all-time high in the VVIX should be anemic, throw that out the window. All these long-standing, long-held beliefs in the marketplace kind of getting thrown to the curb this week, which is kind of interesting. What also is interesting, Jim, something I know it's been on your radar a lot of late, are these weird, some might say aberrant prints floating around out there in VIX land. I know this has kind of been a bee in your bonnet for a while now. You've been tweeting a lot about it. These kind of funky prints right around 8 a.m. What's been going on out there, Jim? Catch our listeners up on this weird print saga, sir.
I have no idea, and I blame it on the Rock Lobster because he's not here.
It is his fault. That is correct.
It's literally just the last 2 days, right around 8 a.m. You get this low print on VIX, and so I put it out to the audience on Twitter to see if anybody would fess up to putting in some crazy bids on some way out of the money stuff. I have no idea. To me, it just sort of says, okay, if anybody wondered whether it was possible to screw around with how the VIX prints, here's your proof. Because there it is. It's on the screen. It's in the numbers. At 8 o'clock, VIX printed down 2 or 3 points, and then it bounced right back. So I have no idea what's actually going on. Somebody at the SEBO is probably trying to scrub the data and look at, who's putting in bids and offers to figure out why this is happening. But, it just says that, the activity in the tails, because I assume it's happening in the tails, can make this thing show some funny prints before the market opens.
But Jim, all those lawsuits were settled or dismissed. There's no, you can't manipulate the VIX. I thought we learned that through the legal system there.
Well, and therefore, I guess these are legitimate data points, and we should just
scoop your VIX get it while it's good. 8 a.m. is the time to buy.
Exactly. Forget the breakfast buffet. Have your trades ready. Oh, that's right. We can't actually trade VIX. I forgot that part.
Yes, that's the missing part of this equation here. I think you alleged some Chicago skullduggery on this, which again, it is Chicago. There's always some skullduggery afoot. I know you caused a little bit of a Twitter storm on the vol side of Twitter out there. And Mr. Rhodes chimed into you saying he thought it was a few of the options used for calculation either had their bids drop out or some out of the money options were seeing early low bids being entered. Mr. Meatball, has this weird pattern of 8 a.m. prints come across your radar? And if so, what are your thoughts, sir?
It hadn't, but it's interesting. Maybe that's just when they're kind of turning off the overnight trade and getting ready to put on the regular hours. I have no idea, but that is definitely a weird one.
So yes, if you have some magical way to buy straight up VIX cash that you're not sharing with anybody else, get out there and use it at 8 a.m. because that's when the deals are happening out there. And if you have thoughts on this, listeners, and you guys are not shy about sharing your thoughts, if you have thoughts on this, what could be driving these funky prints, hit us up. Let us know. Hit Jim up. He's kind of on this. This is his white whale. This is his great quest right now in the vol space. As we keep on rolling, we touched on it before. VIX futures have been quite the talking point for pretty much all of 2020. It wasn't just the pandemic. Started off the year with some crazy developments out there in the political space, the assassination in the Middle East. Then, of course, the election was always on the radar. So that discussion point was, is that little bump around the election, because it wasn't that big at the time, is that warranted? And then, of course, all these other events intervened in the intervening months, and we've seen a lot of other vol come in and then go away and then come back in again. It's been an interesting period, to say the least, out there watching all things VIX futures. Coming into today's show, it's interesting yet again because that AAPL future remains stubbornly persistent around 7 points. The rest of the term structure, though, coming in a wee bit. So I have to tip my hat to the Rock Lobster out there. He's been talking for a while about that SEP future. He thought that was due to come in for its premium to the cash, and that one certainly has quite a bit. That was over 5 points premium not too long ago. Now it's down to about 2.4 points, a little bit, almost 2.5 points north of the cash, which puts it a little bit north of a point lower than last week, about 1.1 points lower. So that one's come in quite a bit. Octo, still about 7 points. That one has remained steadfast out there. Then you got out to Nove, that's about 5.5 points premium to the cash. That's almost a full point lower than it was last week as well. And even out to Jan, I've talked for a while here on this show about, the Jan premiums even pricing in some decent juice out there, which is kind of scary. Maybe they are pricing in the fact that we won't know who the heck the president is all the way through January. So you're talking about nearly a 4-point premium to the cash right now. That's a full 2 points lower than it was this time last week. So that Jan premium coming in pretty aggressively. Mr. Meatball, anything catching your eye out there from a VIX futures perspective, sir?
Yeah, well, how about the volume in the mini VIX futures? They've blown up, and without really stealing a ton of volume from the VIX futures themselves. I'm pretty impressed by that. And, and I know we'll talk VIX options in a second, but I got a chat with Russell Rhodes about the concept of a mega option contract in VIX and how SIBO could economically put one of those together. And, it has me doing some thinking.
Yeah, it's interesting that the term structure continues to befuddle some people who are trying to match it up against the election and, saying, well, why is the October future the one that's higher? Because people just haven't figured out that the October future, when it finally does settle into spot VIX, is going to be looking through the election into November. But the other thing that's interesting about the term structure right now is that it just remains elevated all the way out to the end, all the way into 2021. And, the real question in my mind is whether, the whole structure just, if we go back to 2016 and that election, we had elevated volatility right into the night of the election, and then it collapsed. Everybody decided that Trump was going to be okay, and the markets rallied and VIX collapsed. And the question for everybody here is, does everything collapse again post-election, just with the election being in the rearview mirror? Although I think one of the issues with the elevated term structure is there are a lot of people betting that we aren't going to know anything on November 5th.
There's a pretty interesting trade even going out to December where you could, sell December future by January or sell December future by February and do pretty well and pretty much stay out of the way of the election. that whole back end is, still almost 30. So I'm with you, Jim. I don't know that I'd play in November, but you can play December, January, February and do pretty well. I've been looking at like a in the money put spread December, Jan at like the 40 contract. Kind of interesting.
Have you seen any open interest?
Not yet, but there may be, and it might be me.
It's all the meatball. And you see a funky strike out there. Maybe he's to blame for your funky prints out here in VIX land. Let's see what else is funky out here this week, aside from the futures, listeners. Obviously, Spike still waiting for the futures to come back, so the Spike's options kind of a bit of a holding period out there. VIX options doing a little bit more paper out there today, certainly from an ADV perspective. That ADV has ticked up a little bit this week. Remember last week it was just a tick under 300K, 299,000 contracts was the ADV last week, which is, again, this is a seasonal time, so you would expect that normally this time of year, but this is anything but a normal August, so you might expect a little bit more paper on the tape. Got a little bit of that this week, 25,000 contracts coming back into that ADV. So far, as of a few minutes ago, VIX doing a little bit of paper as we're seeing this kind of weird dalliance go on out there yet again. Is the vol firm? Is it weak? Is it firm? We kind of saw this yesterday too, kind of a weird end to yet another weird week. You can kind of just cut that and print that and play that every week. So far for 2020. 2020 itself has become like an epithet, a curse word. That's so 2020. So that's the year we're all living in here, listeners. Right now, it's at about 349,000 contracts on the tape today. Before we break down the big action today, let's break down what's been lighting it up out there. As we said before, the OI still kind of light, kind of weak out there in VIX land. Just a wee bit under 5 million contracts open, about 4.95, about 3 million on the calls, and about 1.95 million on the puts. If you know anything about VIX, listen in the show for a while, you know that's pretty light. Only cost you about 74,000 contracts to break into the top in VIX land right now. That's usually enough for a good print in VIX during the week, let alone breaking into the top 10. But that's where we find ourselves these days. They get you all the way to the no par calls. No par calls in the top 10. 74,000 contracts. Number 9, 77,000 of the SEP 23 puts. Number 8, 82,000 of the October 25 puts. Number 7, 88,000 of the November 65 calls. Number 6, 91,000 of the SEP 60 calls. A lot of nines floating around out there. Number 5, 97,000 of the SEP 24 puts. Number 4, 99,000 of the SEP 21 puts. Number 3, 99,000 as well of the Jan 40 calls, going out to Jan out here for the first time. And number 2, the Jan 27 calls, 99,000 of those bad boys as well. Number 1 with a bullet, only 144,000. That's usually maybe if you're lucky enough to break into the top 10, but usually not even enough to do that. This week, it's enough for number 1. That's the SEP 20 puts, 144,000 out there. So interesting stuff afoot today. Roughly, like we said, about 350,000 contracts on the tape. The big prints out there today, or I should say the most active contracts, really, because these aren't all in one print. The SEP 24 puts doing about 21,000 contracts. And then the OC 40s and 35s doing about 16,000 each. And the SEP 35 calls doing about 15,000 contracts out there as well. It's a little bit of mixed paper. Yesterday, a little bit of more paper on the tape. Almost 600K, about 576,000. That's one of the more active days we've seen in a little while out there in VIX land as a result of that, back and forth, will they, won't they dance at the market, and hence volatility was doing yesterday. 26,000 of the SEP 50 calls. That was the most active contract yesterday, followed by almost 26,000 of the November 35s as well, and about 25,000 of the SEP 20 puts, and 24,000 of the SEP 40 calls. Wednesday, also a day north of the ADV, about 422,000 contracts. Let me just update here Wednesday's numbers here as well. The most active contracts on Wednesday, 31,000 of the October 25 puts, and about 28,000 of the SEP 20 puts, and about 23,000 of the SEP 28 calls, about 20K of the SEP 60 calls. So there we go. That's the actual paper there for Wednesday. Tuesday, 201,000 on the tape for Wednesday. It should be Tuesday, with about 25K of the October 28 puts lighting up the tape, and almost 17,000 of the SEP 23 puts, and about almost 10K, 9,900 of the SEP 26 puts. Monday, 215,000, so another light day. The big, most active contracts out there. What we were just talking about earlier in Jan. The Jan 40s and the Jan 27s, both gone up about 34,000 times. I got the hint. I got the feeling that was a vertical. Mr. Meatball, is that your takeaway as well? Was there a Jan 27 vertical lighting up the tape on Monday? And also, what else caught your eye out there from a VIX options perspective this week, sir?
I can confirm that was a vertical. They bought the 2740 call spread for about $3.10. And actually, they came back for more on Wednesday. They bought the same spread for about $3.09 on Wednesday. So that was a huge chunk of the volume. Tuesday, the reason why the 23s and 26s were so active was because the biggest trade of the day was the SEP 2326 put 1x2. They bought 126, sold 2 of the 23s, paid 71 cents. The SEP 60 calls, pretty decent sized seller today at 50 cents. Big buyer of the SEP 21 puts. They bought about 13,000 so far, paying 22. And, this one, OC 40s, this will raise an eyebrow. Pretty big buyer of the OC 40 calls, delta neutral. And, and finally, other kind of interesting print that I saw for the week was the December 45 call seller. That was Monday. So pretty interesting stuff. A lot of buying near the money calls and selling way out of the money stuff. So paper is positioning itself for the VIX to go to 35 to 40 over the next month based on the way calls are trading.
Certainly has that air about it. Jim, same question for you, sir. Any prints out there in VIX options land outside of those 8 a.m. VIX prints that are catching your eye? Anything catching your eye in the options landscape this week, sir?
Well, I think Mark covered it pretty well, and I was actually going to ask him a question whether he's seeing people spreading that call action, buying the closer and selling the farther away, which would sort of make sense to me. I mean, you look at some of the open interest in the SEP calls, and you've got big chunks out at 55, 60, 65.
Yeah. A lot of that is being sold delta neutral. So they're not just outright selling; they're selling them as kind of a buy right. Yep. So it's going up as a vol trade because that way upside vol probably a little too high, but they're definitely not naked selling. They're going after the delta for that. Right. And if VIX goes to 40 and the way it's moved over the last 6 months, it doesn't gap open. It swells higher and then swells throughout the day. You have, if you trade those delta neutral, a pretty good shot at making some decent money on those. Mm-hmm. If we rally to, say, 38.
Well, let's see what people are making money on out there in VXX. Usually it's that one direction trade. It is that ever eroding trade. This week, not so much. VXX had the temerity to go up yet again. It's not up quite as much as it was at the start of the show. It was up about 1.5 handles at the start of the show. Now it's up about 1.25 or so handles from last show. A little bit north of 26, about 26.1 or so out there. That puts it at volume today of about 219,000 contracts. That's actually pretty much exactly what the ADV is, which has also been ticking up a little bit of late. So the vol product's getting a little bit more wind in their sails this week, at least from a volume perspective. Big trades today. Looks like some decent size activity out here. We've got about 19,000 of the AUG 27 calls on the tape out there, as well as about 12, almost 13,000 of the AUG 26 puts, and about 8,200 each of the August 26 calls and September 30 calls out there. So a lot of calls dominating the top out there. Let's see what the top positions back that up. Top positions look a little bit light. I think you'll see why in a minute there, listeners. Of course, big number 10, about 16, almost 17,000 of the SEP 21 puts and about 17K of the Jan 25 calls, 18K of the SEP 35 calls. Then we got 19K for number 7 of the SEP 27s. Then we go up to 20K of the Jan 22 puts. Then we go 24, almost 25,000 of the SEP 25 puts. Number 4, 30K of the SEP 30 calls. Number 3, 31,000 of the SEP 23 puts. numero dos here, 32K of the SEP 24 puts, and number one with the bullet, 36, almost 37,000 of the SEP 20 puts. What you don't see on here, of course, is that AUG put spread, the 30-22 put spread out there. Our friend had about 100K of that on over the course of the past month or so. I think he put it on a little over a month ago. Obviously, that's off the board, and I don't see him repositioning out here, so maybe he's taking a bit of a break out here. That put spread worked out, not perhaps as well. It depends on where exact timing of how he took that off. I'll have to dig into the trade to see if we can see exactly if he took it off prior to expiration. But a lot to unpack out here. Mr. Meatball, I know your crazies hang their hats out there in VXX a lot. Anything lighting up your tape or their tapes out there in VXX this week, sir?
I mean, I think the big thing that I would warn people about with VXX and UVXY is you see that giant contango and think you're going to make money. And that's really not how these products work. If we have a huge contango but futures don't fall or rise, VXX is going to go up, and that's what we're seeing. The September future is having a really strong week. VXX is up on the week. You don't have any real leeway there. I actually, with October starting to enter VXX and UVXY, I personally am steering clear of that to play shorts and going right into the VIX contract.
So no middlemen for you these days. Straight to the mothership out there in VIX land. Any thoughts for you, Jim, here on all things VXX, sir?
Well, I think with the correlation we've seen with vol rising along with the market, what I've seen with some of my Twitter buddies is a little bit of day trading in the weeklies. There were definitely some people jumping on the move yesterday and even a little bit the day before. But, when you get to Thursday and Friday with those weekly options, if you get, a little twerk in VXX or UVXY, as we've seen the last couple days, you can make a nice little chunk of change very quickly. And so I definitely saw some people jumping on that the last couple days.
Since we're all talking about UVXY, let's throw that into the conversation as well. I call this a Dave Lincoln special. He was the last of the Mohegans out there trading this one for a long time. Now that TVIX going the way of the dodo, more of you seemingly finding your way into this product. The ADV certainly ticking up. It's up to about 94,000 contracts, puts it up another 11,000 from last week, which was up pretty strong from the week before. So UVXY has been slowly getting a little bit of steam on the options front. You guys know my thoughts on UVXY and its sister out there, SVXY, and the whole mid-cycle refresh that they went through out there. So I won't belabor that again, but it seems like more and more of you are beating your way out there to UVXY. Again, it's kind of a dearth of options out there, pun intended, that's really driving this. Today, decent paper as well, about 140,000. By the way, it's at about 21.7, 21 and 3/4 or so, off a little bit even from the start of the show. It's up about 1.5 points, though, from where it was this time last week. Top prints out there today, about 9,500. I should say most active contracts out there today. 9,500 of the AUG 21.5 puts and 7,300 of the AUG 22 puts, 7,200 of the SEP 23 calls, and about 5,000 of the AUG 23 calls. Remember, UVXY, not exactly a monster out there. Getting better out there. Look at the top position. We'll just do the top 5 because it falls off pretty quickly from there. Top 5. Number 5, D10s, about 9,000 contracts, so only cost you 9,000 to break into the top 5 in UVXY. It's getting there, listeners. Got a little ways to go. 9,700 of the SEP 25 calls to number 4. Number 3, 12,000 of the Jan 10 puts. Then we got to Jan for the rest of the time here. 15K of the Jan 11 puts for number 2. And number 1 with the bullet out there, 27,000 of the Jan 12 puts. Total of a little over 500,000 contracts outstanding out there in UVXY. Before we roll on from the vol space, got to hit on some of the earnings that have been lighting it up out here this week. It's been just kind of an earnings palooza and just a single name palooza out here this week with all the talk of the Apple and Tesla splits. We'll get to that in a second as well, listeners. We have Zoom popping off soon here as well. Again, you get all these reports courtesy of theoptionsinsider.com, like reports for next week, like Zoom and Dell. Zoom's on the 31st. They were at $295.25. Over there, as of the time of this report, they were pricing in about $31. In the past, they moved about $30. So a little bit heavy on the vol side. And we know so far this season and last season that hasn't exactly paid off out there. Dell 62 and about 15 or so was pricing in about $5. In the past, they've moved shy of $2, $1.75. So that one looks a little bit rich out here. Five Below, everyone's favorite in the cheapy $/$5 category. 114.5 out there, pricing in $8.50. Looks a little bit rich because in the past they moved about $7.20. We've also have some move results reports here for names like Dollar Tree. They were about 104.25, and they were pricing in 6.6% move, and they moved about 5%. So again, underperforming. Kind of the narrative this week. Box, same deal. They were at about 19.25 as of this report. They had priced in going into their earnings nearly 11% move. They moved about 6.5%. So yet again, more red on the screen. You can see it if you look at the earnings season report there as well, theoptionsinsider.com. All of this completely free, listeners, courtesy of our friends over there in ORATS land. You'll see the season report is pretty much just a sea of red. Most of the big names have dramatically underperformed their straddles out there, which is kind of interesting. Speaking of interesting big names, let's get to some of the ones you guys have on the brain with a little bit of the old volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol Voicemail, a portion of the show where you guys vent your spleens about all the topics you have on your brains from a Vol perspective. Seems like a lot of you are fixated on single-name Vol right now, in spite of the fact of all the things going on the Vol curve. In particular, all the madness afoot out there. And the two big dogs right now everyone's talking about, Apple and Tesla, of course. They're heading into their post-split blush very soon. They've both had enormous rallies since announcing. No other real fundamental change with the underlying. Just the fact that they're going to split. Yeah, that has been enough for substantial rallies in both of those names. Apple already north of that $2 trillion level. Going to be threatening 3T pretty soon out there. Oh, how distant it seems when people were scared to sell the 150 puts on our network. Not too long ago out here, but coming off the heels of our Options Playbook radio program, the host over there, Brian, he talked about collaring these two big names, and he wanted to put it out to you guys as well. How do you guys think the stocks are going to hold up post-split? So split adjusted, obviously, the numbers will be lower, but split adjusted, will they be higher or lower? We posted this on Thursday where they closed at 506 on the Apple front. Tesla was at 2153. So we gave you four choices, as we always do in Twitter land. Are they both going to be higher? Are they both going to be lower? There's going to be some sort of mix out there. Tesla higher, Apple lower, or Tesla lower and Apple higher. Jim, you are our guest. I will give you the dubious honor of going first. If you have a thought, have at it. Then B, more importantly, what do you think our audience is voting for, sir?
Both higher.
Interesting. No hesitation there at all. Is that your personal belief as well?
They got to go up.
They can only go up, right? What's down? What is red on a market like
Where's
this?
Dave Portnoy when we need him?
Mr. Meatball, same question for you, sir. Where are you leaning, and where do you think our audience is leaning?
I got to say, so I'm leaning kind of neutral-ish, bearish Apple, but I think our audience is, they're definitely conspiracy theorist. So I think they're going to be the most bearish option possible.
So both lower then?
Both lower.
I'm kind of with you. Usually our audience, a bit of a cynical bunch, and they've been fading this rally for some time. Whenever we talk about vol, they're always leaning towards the higher tip on vol. And yet this week, so far, at least only been a day or so, the early blush on this poll, they're all feeling what Jim said, instantly higher, both higher, 52.5% right now, saying that, followed by almost 21% saying both lower. So clear dichotomy there. And then number 3, Tesla higher, Apple lower at about 14%, and Tesla lower, Apple higher at about 13%. So if you haven't made your voices heard, head on over there at Options on the old Twitters, listeners. You got pretty much throughout the weekend. We're going to discuss it later on the show. Everyone's got Tesla vol on the brain. Bill's chiming in with a tweet that he wanted to share with us. Looks like this is from Howard Linzon, the guy who runs Stock Twits over there, or founded Stock Twits. He was tweeting about the crazy vol in Tesla. Looks like he bought a one lot. I'm trying to see what the straight says. The crazy amount of the vol and action you can get with one Tesla option trading $400 away from the strike price. Looks like he got a 1730 set put here. It's hard to tell. He bought a one lot. It's hard to tell exactly what the hell he did here. It looks like it cost him $70. So, and these are expiring on the 25th out here for a one lot. But yeah, that is the case. So who wrote this? And Bill's, the vol and Tesla out there is nuts. Be careful. Some of your chains out there on the brokers may be a little bit screwy right now because of the split. I was actually looking at some options pricing last night and at the close yesterday, and things were just crazy all over the place at a couple of the platforms I was checking because they haven't really found a good way to factor in the split yet. So if you're seeing weird aberrant prints out there, don't take them as gospel. It could be weird stuff going on as a result of the split. These big corporate actions always seem to drive a lot of weird paper out here. Let's end things up here really quickly before we get to our crystal ball with some love. It's our crazy times. Everyone's kind of doing a lot of hand-wringing out. This brings some positivity to the world. This comes from Cynthia. She wrote to us saying, congrats on being the top volatility podcast of 2020 on Player FM. Well, first off, Cynthia, A, thanks. B, I didn't know there were any others. C, I'm looking at this list you sent us, and it seems like they have a very loose definition of what qualifies as a vol podcast. I mean, we'll take it. We'll take the ranking. That's nice. But they have some stuff here that looks like they're about, gender volatility and other things. Slate Money, I don't think that's a volatility show. Motley Fool Money, I don't think that's really a vol show. So, yeah, I'll take it. We like it. Thanks for the love there. But I'm not sure I didn't know we were even on. That's one of those, so many outlets carry our stuff now. Player FM, I guess another one. We see a lot of people loving it on Podbean now. A lot of you coming in on YouTube these days. You like to, quote unquote, watch your podcast. We don't judge, however you want to get it. So yeah, we'll take the love there, Cynthia, even if perhaps it's a dubious list nonetheless. As we keep on rolling, it's time for another dubious recounting. It's time for our crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to that most difficult, that most dangerous of segments. Yes, it is time for the crystal ball. And, go figure, the 1 week that I'm not super aggressive on a little bit more upside out here on all things VIX and spikes is the 1 week we actually get a little bit of that juice. I'm still the quote-unquote winner, but nowhere near within our range of victory that I like to be. Coming into the latter portion of the show, we're seeing VIX just north of 24, about 24.15 or so. Spikes at about 24.5. I was at 22.25, so I was close to 2 points on the VIX side and about 2.25 points on spikes. You know our margin of victory these days, listeners. It's got to be within a point to really claim victory. So no victory for me. Andrew was the next. I take that back. Tom Jark from MIAX was the next highest at 21.5, and then Andrew was bringing up the rear, the Rock Lobster, at 21.25. So I technically, quote unquote, am the closest, but it's not a victory. So it's been a difficult year, listeners, for all things. I wear that as a bit of a badge of honor, though. Predicting vol in this year where really nothing makes sense. We joked at the top of the show all the usual gauges and sentiment and analysis you use to analyze things these days. You kind of just throw it out the window. So in this type of year, I kind of take it as a bit of a point of pride that I'm not exactly knocking the ball out of the park. So maybe that would mean I'm a little bit irrational as well out there. So, Jim, that means you get the dubious honor of going first, sir, because nobody else won. What are you feeling for this time next week in VIX and spikes, sir?
Dubious indeed. And I've been thinking that we're going to have this thing move more materially higher for the past couple of weeks, and I've been wrong. And, even the spike we've gotten this week, I should say, they both got up a little over 27 yesterday, and today we're whacking it back down.
Jim, there's no prize if you win. This does not require the dissertation.
There's deep money involved here, sir. A lot of wagering going on behind the scenes.
Mark, I was trying to give you time to come up with your answers. I go I go 28-25 for both of them.
Wow. I like it.
Wow, feeling north out there again. So the implied will get juicier. Maybe the realized will catch up. It is one of those crazy weeks. So technically, I could choose who goes next. I'll say Mr. Meatball. I'll be nice. I'll go last. Mr. Meatball, you didn't play last week. What are you feeling for this time next week?
32.
Wow, that's the highest you've prognosticated in quite a while, sir.
Yep.
Interesting.
32.
So that puts me in the odd position of, will I actually be the lowest on the totem pole out here this way? All your prognostications do make a great deal of sense to me. I've been the lone guy on the upside of the totem pole for quite some time when it hasn't really worked out, and interesting to see. It's one of those, like I said, one of those crazy weeks. All the analysis, you kind of have to throw it out the window. We're at about 24.25 right now in spikes. I'm going to feel north. Not quite as aggressive as these folks are feeling, even though if it comes to pass, I shan't be upset or even bewildered. I'm going to say 27.5, so north of where we are right now, about 3.25 points in spikes and about 3.5 points in VIX. So there's your market, listeners. 27.5 to the downside. Jim, 28.25, and the Meatball playing the old Russell Rhodes role of super high up, 32. Unfortunately, that music means we've come to the end of an epic sojourn through the world of volatility. Don't worry if you're listening live. Even though this concludes our broadcast week, we'll pump some fun stuff in there. So if you missed any of our broadcast shows from earlier this week, we'll put some in there. You can catch up. Of course, you can always get our shows wherever you get your favorite podcasts out there, even on the old YouTubes these days. Or, as our listener said, Player FM. It's over there as well. Top Vol podcast of 2020. Who'd have thunk it? All right. Let's go around the horn again. Jim, we'll start with you as our guest, sir. If folks are intrigued, they'll reach out to you, or maybe you want to leave them with any little hints or nuggets of the vol space. Now is the time, sir. The floor is yours.
Track me down at Vixologist on Twitter. That's where I put my stuff.
That's where I put my stuff. Is that going to be a major in school someday? I'm going to study. What do you study? I study Vixology. Are you pushing for that, sir?
Yes. Well, it's a different kind of cocktail.
Yes, there you go. Are you allowed to study other vol products in the Vixology course, or is it nothing but VIX?
Nothing but VIX.
Nothing but VIX. Well, SEBA will be happy to hear that. Mr. Meatball, same question for you, sir. If folks are intrigued, they want to maybe get on your email list, maybe they want to attend a webinar, maybe they just want to become part of that cool trading legion. Where should they go? What should they do?
Yeah, go to optionpit.com. I put out content every night on our email list and post to the blog every day. If you're not an email subscriber, you are missing out on some pretty darn good stuff.
He does put out a lot of content out there. Check him out. Optionpit.com is the place to go to sign up for all that fun stuff. And, of course, don't forget our friends over there in MIAX land. MIAXoptions.com/spikes is the place to go for all the info you want on all things spikes. You got a cool little video there on the top explaining kind of what the heck spikes is in a couple of minutes. Got all the data you need, the press releases you want to know when the futures are coming back. You'll see it right there. And, of course, links to a fun little show out there called Volatility Views. Check it out, MIAXoptions.com/spikes. Looking forward to seeing those futures back listed so we can see some more options volume. And, of course, the Viking/V spikes making it on the air here as well. And on behalf of our friends over there in MIAX land, and indeed the Meatball, and even Jim, and indeed myself, I thank all of you out there for downloading, streaming, subscribing, for sending in such great questions. Keep those coming. And we'll see you back here on Monday for the option block, all the way through to Friday for more Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the Spikes Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with Spikes. Learn more about Spikes at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.